Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, November the 3rd. The year's 2022. Let's talk trading. How much is enough? Part 3 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, these 15 minutes of trading are going by so fast. We're talking about this subject. I guess it's hot, so we have to continue from yesterday.
Yeah, yeah, they have been going pretty quickly. But yeah, we've been talking about this whole idea of how much is enough, and the different aspects of that. How much is enough to have in your trading account? That's always a question. Is can you start off trading? And we were talking about this yesterday a little bit. Could you start off trading with only $100 in your account? So yeah, technically you can. You're not going to make very much money doing that, but you certainly can do it. But the nice thing about it is, and this is where we started to end the call yesterday, and that is that what you can do is if you find a way where you can live off of something else, live off of your spouse, live off of whatever else, you're living off your current job, and trade, and you just go and keep on investing whatever you win back into it, then yeah, you can start off with $100 account because, it's on a $100 account, it's pretty easy to go and make 10% a day. And the reason why is because if you're making 10% a day, you're only making $10 a day. But the type of thing is that there's so little risk involved with that for the most part for most folks that even if you blow $100 account, it's not like for most folks anyway, it's not like you're not going to eat that week, and and the thing is, it does teach you something though in that fashion too, because the reality is you shouldn't be risking any more than you're willing to go and literally burn in the street, and so it teaches you that through that madness. I was going to call it a method. No, it's through that madness of going and doing that. But if you're making 10% a day, shoot, at the end of the week, you no longer have a $100 account. You got a $150 account. And then now all of a sudden things decide, you can see how that can multiply up. Now I don't recommend trying to go and get 10% an account, especially once you've built up some type of account size. But it just shows you that yeah, you can do it. So even a $100 account is enough to go and do it.
Well, the one thing about that is, though, you said making 10 pips is easy. But the question is, what position size are you trading? Are you going to trade $1 a pip with a $100 account? Because if
Right.
you could easily take a 5 pip stop, and there goes 5% of your account. So
Yeah, exactly.
so I think
Yeah,
making
and
10% might be pushing it. That's why we used to have the 2% club. Just make
right.
2%.
Yep. Yeah, and that's if you just make the 2%. I know you came out with a spreadsheet a long time ago, and you had put it out someplace, and maybe that's something that maybe we should put it at the top of the list for traders to look at again. But if you just make 2% a day, okay, it's amazing how much you can make, across a year. By the way, we got news dropping in about 10 minutes, and that's why the price is moving around like a like an irrational whatever, But in any case, if you're making 2% a day, and the thing is, you don't take the money out of the account, and so let's say I had a $100 account today, and tomorrow I have $102 worth, that means I can risk a slight amount more. I probably wouldn't do it, change it up every day. I'd probably change it up at the end of the week. That's what I did to build my account. Just at the end of the week, say, hey, look at this. I got an extra, $100 or an extra $50 or $20, depending on where you're starting at, so that you're able to go and say, hey, now instead of trying to get 2% of $100, I'm now trying to get 2% of $110 or $120. And you say, well, it's not very much more money. You're right. It doesn't seem that way. But maybe at the end of the week, instead of having an extra $20 in your account, now all of a sudden you've got an extra $30 in your account, or even an extra $25 in account. So now you go and do that. So the following week when you're trading, you're trying to get 2% of not $100, but now you're trying to get 2% of $150. It adds up very, very quickly.
Yeah. Hey, did you notice? I'm looking at the 1 minute chart on the pound. We had that big return bar at the beginning of the hour, and price
Right.
definitely went right back. I mean, that would have been a 40 plus pip trade had you nailed it.
I didn't take that trade. For any of the traders that are out there that do pattern matching, right now we've got a perfect pendant. They call it a pendant pattern out there. If you look at the 1 minute, it looks like a little flag with a big long staff going up, and you draw the lines of that pendant flag. And so instead of having horizontal lines like we usually do, you wind up having some slanted lines, but it's straight line trading, and you just wait for the break of that straight line, and you can pick up some serious pips. So you would have broken it right now, and you would have been up, 3-4 pips at this point.
Yeah.
And it looks like it's going to keep on going. And you actually try to run it all the way down to the bottom of the flagpole.
Right.
Just another method that's out there, and the reason why I bring it up was, one, because I'm a squirrel and I just saw it and had to say it. And the second reason why I wanted to say it is because the reality is that with this trading, the method really isn't the big thing. And we all make it the big thing. It's not the big thing. The big thing is going and preserving your account and having your stops in place, having realistic TPs in place. That's the big thing. The method will get you into the trade, but the reality is that, you got to be able to preserve your capital and make sure you got capital to play with tomorrow, and that gets us right back to this whole idea of enough. Do I have enough? Did I make enough pips on this trade to have made this trade worthwhile? Have I gone so far that I've taken enough of a loss? And those are the questions that you as a trader have to go and answer, and you have to be honest with yourself. And if you're honest with yourself, you can make, Forex is a place where you can go and make a living off of it. And I'm not going to go and say that it's easy to do it. It's easy to click the button, and it's not. There's a lot of learning that's involved, and at the same time, but you can go and make, significant amounts of money. And that trade that I just called out a few seconds ago, or a couple of minutes ago now, you could have made 13 pips on it.
Yeah.
Beautiful trade.
Yeah, in fact, a trader reached out to me and said that they discovered me and that they had, I think they said they had followed ICT and they've been profitable, the last couple of years. And I said, well, you know what? If you're profitable, don't change a thing. And I think that gets back to how much is enough. I mean, if you are profitable, then you're amongst the select few traders. And if you're profitable on a consistent basis, day in, day out, week in, week out, month in, month out, year in, year out, don't change a thing until something doesn't work. And, I think Walmal, over the past couple of years, you and I have gone through, I don't know what, 4 or 5 different methods that you employ. And the thing is that probably, like you said, the method doesn't matter because you've got the other, legs of the stool down to a science. So somebody could just give you almost a coin flip method, and chances are you'd probably come out ahead because you've got the money and risk management side down and you've got your brain management down.
Right. And that's what's most important, is going and getting those other things down, and
well, they're all important, not most, they're all important. It's a 3-legged stool. If any leg is short, then that stool's not going to stay up.
you fall over. But yeah, exactly. And the thing is, you got to get those other things in place. You got to go and get your brain under control. You got to, and it sounds like we're probably sounding like a broken record to a certain extent, but it's the truth of the matter. If you don't get your brain under control, you sit there and you're just going to get yourself cut up. It's like last night I got myself into a trade. There was nothing wrong with the trade. It's just that I was trading during a slow time during the Asian session. I'm sitting there saying, I got to get out of this trade. This thing is dragging on and on and on. I mean, I'm in most trades for like 2 minutes max. In this trade, I'm in this thing 30, 35 minutes. And I'm not underwater or anything. I'm a little bit underwater, but nothing of any significance. And the trade wasn't off yet. It was still a valid trade. So, I forced myself to sit there and, and wait for this thing to go and do what it was going to do. And next thing you know, I got out. And when I got out, I was up. I don't remember. I told you when I first got on the phone call, but I had to have been up probably somewhere around 12 or 13 pips, 14 pips. I got out of the trade. Nice little trade. Took about 40, 45 minutes for it to go and actually, happen. But maybe that's the reason why I want to trade the Asian session so bad, but maybe that's why I don't trade it, because it doesn't happen quick enough for me.
Yeah. Hey, it looks like we went back to that return bar. That's the that big M1 candle that was 20 some pips. Looks like we went back to close to the open. Let's see, did it actually hit the open?
And the thing is, I went and said that thing was going to go back to the pole. Well, guess where it went? It went right back to the bottom of that pole. And using pattern matching, it does it.
Yeah.
Using your concept of return bars, it does it.
Right.
That I think is that we all observe the same things. The problem is where people get into trouble is, again, I know I'm beating a dead horse here, but the problem is going in there and not going and sticking to their method of entry and then and when I say their method of entry, I mean, in other words, taking a loss when you're supposed to take a loss and taking a win when you're supposed to take the win, and that's what it really comes down to. I mean, that from where I said to get into that trade, you would have picked up 21 pips, and that's just a different method. I don't like trading that, because I just said it a few minutes ago. I don't like being in trades that long. I like being in trade 1 or 2 minutes. But if you notice, it took 1, 2, 3, 4, 5, 6 candles, or another 6 minutes for that trade to happen. And usually it takes longer than 6 1-minute candles. Usually it takes 15 or 20 candles for this to fully develop into where it just moved to.
Yeah.
I don't like that.
Yeah, and I think that's we talked about patience versus quickness. People say you let the trade develop or whatever, and it's like, well, your goal is, take a couple of pips, make a brick's worth of money and stack the bricks.
Right. I don't mind being here for a couple hours a day, going and making the money. That's not my issue. My issue is I don't like being in the trade very long, and so I'd rather go and, I call it chunking it. I'm just going to go and grab a chunk of the market. Just a nice little chunk. I'm going to go and grab, 2, 3 pips here, 2, 3 pips there, and, do that for a couple hours a day. The next thing you know, you got 10 pips or more, and that's how I look at the market. That's how I try to take the market out. Back in the day, 2, 3 years ago, I was heavily into going and doing Walmal trades, and I still take those trades. There's nothing wrong with that method. I was trying to get 5, 7, 10 pips. And if you go back and look at those videos from back then, you'll understand that the 10-7-5 rule that I had, and there's nothing wrong with that. The problem for me again is I recognized my personality and how I found myself getting out of trades too early, and that became a problem because I was taking on more risk, and I had to have bigger winners because I was taking on more risk. Again, so the method will go and dictate what you have to do in terms of chunking it and getting in and getting out.
Yeah, so once again, the fastest 15 minutes in trading is just about over. So fellow traders, post your questions and comments and let us know how you see it. Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.